Here's something wild. Institutional investors just poured more money into Ethereum ETFs in 3 months than they did in all of crypto last year, jumping from 4.8% to 14.5% ownership. But that's not even the most surprising part of this story. Those numbers are staggering when you think about it. We're watching traditional finance embrace crypto at an unprecedented scale. And what's really fascinating is how these ETFs have completely transformed the way people invest in crypto. Remember when buying Ethereum meant dealing with complex digital wallets and private keys?
Oh, yeah, it was like you needed a computer science degree just to make a purchase. So, what's changed exactly?
Well, since May 2024, when the SEC approved spot Ethereum ETFs, major players like BlackRock and Fidelity have been handling all that technical complexity behind the scenes. But here's where it gets really interesting. They're now pushing to add staking features to these ETFs.
Hmm. Could you break down what staking actually means for our listeners? I know it's a bit complex.
Think of it like this. When you stake Ethereum, you're essentially putting your crypto to work as collateral to help secure the network. In return, you earn rewards, similar to how a savings account pays interest. Now imagine that happening at an institutional scale through these ETFs.
And that's what makes the February 2025 development so significant. Companies like Grayscale and 21 Shares filing to add these features.
Exactly. And the market reaction has been intense. We saw Ethereum's price jump significantly when these staking-related filings were announced. But you know what's really keeping analysts up at night?
Let me guess. The potential impact on institutional adoption?
Well, that's part of it. But there's also this fascinating debate about centralization. If these big ETF providers end up controlling large amounts of staked Ethereum, they could theoretically have outsized influence over the network.
That reminds me of the early days of stock market ETFs and how they changed corporate governance.
That's such an interesting parallel. And just like those early ETF innovations, we're seeing all sorts of practical challenges emerge. Like, how do you handle tax implications for staking rewards within an ETF structure?
So, what does this mean for the average investor who's interested in crypto but hasn't taken the plunge?
Well, these ETFs essentially offer a middle ground. You get exposure to crypto through your regular brokerage account, potentially earn staking rewards, but without dealing with the technical complexities. Though, it's important to note you can't actually use the Ethereum for things like NFTs or decentralized apps.
The institutional adoption figures really tell the story here. The jump to 14.5% ownership in just one quarter shows this isn't just a trend.
And here's something that's not getting enough attention. These developments are putting enormous pressure on other blockchain platforms. It's like an arms race for institutional acceptance, you know?
That makes me wonder about the broader implications for the crypto ecosystem.
Well, I think we're watching crypto mature into a legitimate asset class. These ETFs, especially with staking features, could bring in a whole new wave of institutional money. But, and this is crucial, they don't eliminate the underlying risks.
Speaking of risks, we should probably address the regulatory landscape. How are regulators responding to all this?
So far, the SEC's approach has been cautiously optimistic, but they're clearly taking their time to understand the implications. It's like they're writing the rule book while the game is already in progress.
That uncertainty must create some interesting challenges for ETF providers.
You know what's fascinating about that? These providers are essentially building the plane while flying it. They're trying to bridge traditional finance with cutting-edge crypto technology, all while staying within regulatory boundaries.
Looking ahead, what should investors be watching for?
Three main things. First, watch how these staking features get implemented. That'll set precedents for future products. Second, keep an eye on institutional adoption rates. They're the real indicator of mainstream acceptance. And finally, pay attention to how regulators respond to these innovations.
Those are really practical insights for anyone interested in this space.
And that's really what it comes down to. We're watching the future of finance unfold in real time. But as with any investment, especially in crypto, understanding both the opportunities and risks is crucial. The key is to stay informed and never invest more than you can afford to lose.